What's happening, everyone? Quick update. Just wanted to drop an impromptu video. Over the past week and a half, a lot of you have been having success with the top and bottom ticking strategy that I dropped a video on last week. We had people passing fundeds, and we even had somebody get a max allocation as well as a payout on 5 different accounts. So this gentleman is on his way to having a 5-figure month. I've also secured 2 payouts this week as well as a payout from my personal account. But with that, and with every strategy, of course you do have losses. Of course there are times where it's more likely to work than other times. So the purpose of this video is to teach you how to identify the highest probability sessions and the highest probability levels to actually top and bottom tick. So let's dive straight into it. You guys are going to learn a lot. And if you're already having success with this strategy, this is about to take it to a whole nother level. So let's go ahead and dive in. So first, what exactly are we seeing here? What session profile is most likely to play out? And let me give you guys a little bit more context. So we have 9:30 open right here. That is where we look to start trading the market. Above that, we have a weekly order block mean threshold that has already been sold off from. And then we also have previous week's high up here as well. And then on the downside, we don't really have too much. And then we also have the weekly order block level that we've already traded past last week. Based on this context, we are probably leaning more towards the bullish side than the bearish side, and we can use these 2 levels as potential targets. We also have a swing high up here that we could potentially use as a buy side liquidity target. Now, from an intraday perspective, what do we have going on? Well, we left London high up here. London high has already been taken, and it looks like it moved a decent amount past that. Didn't really sell off fully from London high the first touch, and then below that we have London low down here, which is still left intact. And if you watch my strategy video, you would know that this is a perfect opportunity for a New York continuation profile. What is New York continuation? When we leave London low intact, we go ahead and have a bullish or bearish displacement. In this case, it is a bullish displacement, and then we leave intraday PD arrays that we can use as points of interest. So in this case, we still have this point of interest that's being respected, but we already traded to that one. Bit of a reaction off of this 15-minute order block slash sweeping this low. And then we also below that have this 15-minute order block mean threshold. And that to me is looking like the highest probability area to place our order. So that will become my point of interest. You can see it's right in that OTE zone as well. If you want to use OTE, I'm going to go ahead and place a limit order right here. Stop loss is always a fixed 10 points, and then we have a 1 to 3 right there. That's going to be my TP1, and then we can hold a runner up for the high as well. I know some of you already saw me do the live execution of this week, but just to refresh anybody who hasn't, to give them an example. Let's see how this goes ahead and plays out. So we do get an initial buy off the low from the previous 15-minute candle. We also get a sweep of the low, but watch this, we actually come back to this level, and this is the purpose of never chasing an entry, always letting it come to you, because right after that we get our perfect 1 to 3 right there. Now, we don't end up getting our runner, but we do end up getting our 1 to 3, and that is all that matters. It even goes for about a 1 to 3.7, 3.8. But the main question isn't how do we catch these good setups when they're looking good. The days we have to worry about is when things look perfect, but they're not, and it ends up faking you out, or the days where price is just likely to disrespect these levels. How do we identify before going into the session, before 9:30 open, how can we tell if our level is going to hold and get respected like in this case, or not hold and get disrespected right away? So let's take a look at this example right here. We have a similar thing going on. And a lot of you guys might look at the session and be like, oh yeah, this definitely looks like it can be somewhere where I can place a limit order right here on this order block. And then we have another order block. So you could probably place a limit order down there as well, right? These are 2 perfect looking order blocks. We got bullish displacement, bullish structure, and we have London high up here that we can possibly target. And we do have, this 1 hour fair value gap, this 15-minute, but we should ideally draw to the time-based liquidity, right? So let's go ahead and see how this will play out for you if you decided to place your orders on those levels. You can see 9:30 open starts right there. And you can see before 9:30 even happens, we already disrespect both of those levels. So on this day, it would be pretty easy unless you're trying to jump the gun and you try to place your limits before 9:30 or way before 9:30. Me, typically, I wait till at least we're in the process of closing the last 15-minute candle before 9:30. So right about 9:25 to 9:28, I'm tuning in, I'm locking in on actually placing a limit order. Now, I might outline a limit order and then place my stop and then not press this button. I'm never placing this way in advance, because in the case that we do disrespect these levels before New York Open even happens, then I don't want to even have those levels on there because they're already disrespected. That's one way you can tell as well, and may invalidate the session before it even starts. And you can see before 9:30 open, both these two levels were already closed past on their respective time frame. But aside from waiting for the 9:30 open, there are also ways to tell that this session was unideal. So let's go ahead and zoom out here to the 4-hour time frame, and you can see more context. See, before we even had 9:30 open, we did have 4-hour order block mean threshold down here. We had closed past a 4-hour order block, and then we had also gapped down significantly. So overall, on the 4-hour time frame and above, we were pretty bearish. And then you can see the new day opening gap, we gap below a daily order block. And then of course we had previous week a low as well to draw to. But before we drew to that low, obviously we could already tell that based on 4-hour price action and the way the daily gapped open, that this is probably unideal for buys. So on this day, I actually faded these setups. Then we're going to take a look at this example, which is also a similar looking day. So you can see it's the candle right before New York Open. We've been traveling bullish throughout the whole entire day, pretty much ever since London session. London low is way down here. London high has been taken, so we should be leaving London low intact, or at least that's what it seems like from the way it's pricing right now. And then we also have a 15-minute fair value gap that looks like it's already been reacted to and played out a nice buy off that level. But below there in the OTE, we do have this 15-minute order block. So in this case, a lot of you guys would be looking to place a limit order there and then see if it plays out to the upside. However, there are instances where the New York session can look like it's going to be New York continuation. However, if you zoom out, it is really New York reversal. What we're going to do here is zoom out to the 4-hour time frame. And if we take a closer look, obviously this candle wasn't all the way through this level at this point, but we had a 4-hour fair value gap. We were respecting pretty big 4-hour fair value gap at that. We had price lower after gapping lower the previous day. And then we also had draw on liquidity down here previous week low. And then on the upside, we did not have any draws on liquidity aside from this 4-hour fair value gap way up here, but we were still respecting this fair value gap, so we'd have to trade through that first. And then other than that, you could say we had a 4-hour order block down here, which we technically did. However, the overall trend was still bearish, and we had already retraced to the midpoint of that fair value gap, and we had already also touched a daily breaker block. So we also had a daily breaker as well after this displacement down. So you can see we're reacting off that daily breaker block and the 4-hour fair value gap. And so when New York session opens, you can see boom, we price right through those levels. So it's a pretty stark contrast compared to when price just goes like this and offers you your setup right off that level. But again, context, narrative, higher time frame bias, this is all key in order to be able to execute any model successfully. And if you look on the lower time frames, price is right through those levels, doesn't really even react off those levels, and then it just goes lower. And then where does it go? It goes to hunt London low. Contrary to New York continuation, New York reversal is when we've been pricing in a direction ever since London, so we've been going higher. A lot of times we'll take London high along with a couple different PD arrays with our higher time frame level. So we had our daily breaker, 4-hour and 15-minute in the bearish direction. And then after taking that, we go to hunt the opposing London high or low. And in this case, it's London low. So you can see that played out there perfectly. You could have taken a trade from here rather than going long right there. Let's go ahead and go over one more example here. This was another day where price looked like it could potentially continue up and was already starting to give a little reaction off that mean threshold. A lot of you would have also placed an order right here or at that low, or maybe you got in early, 10-point stop. And then we also had another IFEG here technically because we closed past that low. So let's go ahead and see how this one plays out. Goes right through that level, right into London low. So why did this one lose? It was a similar situation to the last one. We were simply pricing off a 4-hour bearish level. We did not necessarily have a draw on liquidity higher, and then we also had a lot of draws on liquidity lower, including a daily order block. So in this situation, we were bound to go more bearish than bullish. So what could have you done on this day instead? Well, let's go ahead and fast forward here. We go ahead and sell off of this order block right here. So you could have taken a sell off that order block right there, 10-point stop, and you would have got your 1 to 3 right there. And then once we close past this order block, that was a breaker block. We were also going into 10 a.m. macro. When boom, we finally get the displacement lower. So now at this point, what do we have? We have a breaker block layered with an order block. So you could either place a limit here or you could place another limit here. So in this case, I'd probably half risk at the bottom, full risk at the top. Let's see what happens. And boom, you can see the lower one ended up getting filled in that scenario. So got another beautiful 1 to 3 opportunity right there as well. And then you can see it finally starts to go the other way after that. Just wanted to cover those because I feel like the market's been providing a lot of insights into this model over the past week and a half. For those of you who are trading this and having success already, this should add a whole new layer to your game, should improve your win rate, and also give you a little bit more discernment when you're starting to place these limit orders. And if you haven't watched the full tutorial, make sure to go ahead and watch that. Very important in understanding these more advanced concepts. Comment if you have any questions, comment if you learned something from this, subscribe to the channel, and I'll see you guys in the next one.